house or a condo or whatnot, or am I moving into a rental unit? So it's going. So as we see here, one specific data that I've identified from 1990, from this time span to this increased about 8.1 times as many people that's moved in from renters. Whether compared to these two same years, were only increased by 2.1. So therefore, they're both at both categories of owning and renting are increasing. However, the renting is increasing in a dramatically higher proportion.
For reference, a time series of percentage of one or the other would have been a much easier thing to interpret.
Okay.
Because I don't follow that. You know, it's easy enough to have taken a time series.
Okay.
Okay.
I did the numbers myself to know what that calculation is, just to go based off of the chart and whatnot. So then what we can see for these two charts here, we have 2009 occupied housing units and then 2013. We can see basically, at least for the owner occupied, the numbers are really small. But the total number of people who moved into their own homes actually decreased from 2009 to 2013, whereas the renters has increased. And here it breaks down from either it's a single, detached, whatnot. So here in the multifamily section, you can see that the numbers, they all match up, they all increase.
Okay, and Victor, why would it be that the percentage of home ownership declines from 2009 to 2013? That's the question.
Right. Well, there could be a variety of different factors. Either interest rates of housing, the mortgage rate, people don't have enough disposable income, especially from 2009, which is the time of the recession where we're trying to still kick back and get back in, and people getting their jobs and whatnot and reestablishing themselves. That probably is a higher
Yeah, I'm going to ask I'm going to ask the difficult questions. Is as we have seen, and you're telling me,
right,
which I intuitively believe that home ownership levels have decreased
right,
over the last 7 or 8 years. What impact does each one of those factors you identified? How does unemployment rate? Because unemployment rates come down from 2009 to now.
right,
Interest rates are at historical low levels.
right.
Why would we have decreased home ownership rates?
Well, if people don't have enough jobs, they don't have enough money to buy homes.
But the unemployment rate's going down, isn't it?
Well, yeah. Which hence why the number of people who are buying their homes is decreasing. There's a linkage there. So,
I think it's the other way around. If unemployment rate goes down, if
oh, okay. I thought about No, I know what you're saying.
Okay, and what I'm really looking for is, again, and the same is, you know, can we chart them? Can we see where unemployment rate and home ownership intersect or not? Do they follow the same trend lines? Right. Does household creation, you know, impact this? I don't know. Does tax policy? Christian, you had a question on this?
Not a question, but for instance, like in this market, it's really tough to get, like, there's people are working, there's money, but they can't buy houses because all the investors are buying the houses. Right. Cash. Like my brother's looking for a house for the past 3 years.
Yeah, but that's a valid point. But let's stick on national trends right now. Keep going. Keep going.
So yeah, these are just the only things that I wanted to highlight here. Just in general, what's going on. Obviously, we know the population has increased in the housing units compared to owner and renter. What's going on? And now I'm gonna go on into the specifics of who are those people that are either owning or renting. Okay. In my article, in the article that I read, in the demographics section, it stated that housing is a normal good. Therefore, so it associates and it links people's incomes with their purchasing power. So if that holds true, then we would assume that people who are older, who are well established than the younger generations, have more money, therefore will be buying homes. So if that holds true, then there would be more inclined of people. The data that I showed previously, if that holds true, would show that would hold true that people who are buying would exceed people who are renting. However, the data that I showed before doesn't show that. Why? Why is that? Okay. So it's basically what the information that I found. I saw an interview by Jeffrey Adler. He works at Yardi Matrix in July, and he said that there are two basic cohorts, which I believe somebody said earlier, which are the millennials and the baby boomers who are of aging. Millennials obviously want to be in higher dense area downtown. New York, for example, is a great example of that. And what is there a lot? Multi-family housing, all these big structures of buildings. And then the older generation who could have previously had a home in the outskirts, want to be closer to their family, they want to downsize, their level of responsibility is lower because owning a house, obviously entails a lot of larger responsibility. So they want to be closer to the goods and services that the activities and whatnot. And also here, what we can see here by the graphs is that all throughout the history of time, the median age of the population has been increasing. So therefore, there are larger amounts of people that are in the population that are 65 years and older versus the younger generation. Why is that? The fertility ratio. A lot of people are. Well, yeah. So here it shows the average percent of people from 0 to 20, and the fertility ratio, and then here is 65. So basically, people are having kids later. Families formations are slowing down and whatnot. So people aren't reproducing as much.
But so you're saying that our fertility rate is 2.0? So
yes.
we're like in ZPG, right? We're not growing.
We're not growing, right?
We're not. But so how do we get to 300 and something million people from 200?
Right. That's a good question. Thank you. And then one last thing that I wanted to highlight here was obviously the life expectancy of us as population. It's increasing due to medical technology. We know how to cure not everything but certain things. And then here is also, which I will connect it later on. I just figured out that it might not have been a great day to put it here. But Social Security benefits haven't really been increasing as much as we have older populations and a larger portion of that. But yes, if we're not reproducing as many people as we did before, then how did we get to that number of people having this in the United States? So we go into immigration. Here we can see, at least from 2000 to 2011, the different levels of immigration, how it's been coming into the United States. Obviously, after 2000, it's been increasing. Then bam, 2008, 2007, thereon, it decreased. Why is that? As we said before, the real estate boom, there weren't enough jobs, so immigrants didn't find
I can't read from here. How many people immigrate into this country every year? And that's unauthorized, but we also have legal immigration too.
Right, so these are unauthorized. These are the ones that aren't.
These are the ones we don't know about.
Right, exactly.
We only know the ones. Okay, do you know the ones that we know about?
I found it with this information, but I didn't want to concentrate on that.
So you're telling us about the ones we don't know about.
Right. But yeah, so here we can see demographics, like where they come from and whatnot. But why is it important to know the aspect of immigration of our population? Because there was a study shown that from like in 1980s and 1990s, because the baby boomers were then getting more established and getting more money and income, that they were buying their homes. So they predicted that the multifamily rental would then decline. However, because of the large amounts of immigrants that have been coming in since 50s, 60s, 70s, 80s, and it's been increasing, they've replaced that segment of the population of citizens who are renting, and now they're the renters. If that makes sense. Okay. So then a large variety of these people are, as for the millennials and the baby boomers, of all residents or non-residents, are going into these high dense urban areas because there's more opportunity and jobs, placements, and whatnot. And it also shows that because of the natural rules of supply and demand, because there are more people coming in, i.e. the immigrants, it shows that the pricing for the rental market will then increase.
So what are the rates for multifamily assets in this country, and how are the trends over time? And how do the occupancy factors play into that?
That's a good question.
And the supply that we've built?
I didn't go into the specifics of that, but in my personal view, it obviously depends on where you're living, because a one-bedroom in New York is very different from a one-bedroom here. So I would assume that it holds true that
Don't assume
on-
anything. Okay, keep going.
That in high density areas that the rental rate will be much higher because everyone wants to go there. The demand for it is higher. Therefore, it increases and pushes up the pricing rents. Okay. And then how does this connect to capital markets? Is that what I said? Okay. All right. So here I'm reiterating again, the median age of the population is getting older. So therefore, if we have less younger people and higher older retirees, that means that the dependency ratio of younger to older is increasing. We right now, we are paying for the pension funds and the
Hold on,
retirement.
who's we? Because we've got different age strata here.
Well, everybody who is not retired and not 65 and working. Well, I guess that don't count. But yeah, so since we have a higher percentage of the population that is 65 and older, and the people who are younger, the working age group, because that category, those people in the population are less of, we have more of a higher dependency ratio to support those people, and which showcases here and how it's been gone throughout since the 1950s and whatnot. But then how does it connect to capital markets? If we have less people putting in their money into these institutions like depository institutions, banking, the system that we know of banking, obviously banks take the money to redistribute, to make loans, to make profit and whatnot, and if that decreases, then there's no capital for them to then redistribute and make more money, if that makes sense. And then, how else is it? Oh, also, because the older population are now with the asset class, with their investments, they're more in tune to have more income saving type of assets than growing, because they're older. Why would they want to continue try to push to increase their assets? They're going to be trying to sell their assets, but because of the simple rule of supply and demand, as I said before, because there's more supply and the demand for those to buy those assets are less, that automatically pushes down the prices of those assets. So that's, I tried to make kind of the connection there. And I believe that, you know, this study could have been much more in depth with unemployment and pricing of rentals and the income and whatnot, but you know, I did all I could in covering a few points here, so
I do just want to add a couple of things. I won't get into it. Yeah, I do have discrepancies with your last 2 points, significant ones, because they're in fact they're not true direct cause relationships between these dependency factors and the fact that we have fewer dollars going into the capital markets to invest in this. Because in fact, we have an increase in multifamily assets every year in this country, and have had even through the difficult times. It's the one asset class that we've continued to pour money into. So there isn't a direct cause and relationship between, you know, the fewer younger people and more older, you know, people. But anyway,
So why
Chris?
why have homeowners decrease from?
well, hold on, and I'll answer that question, at least from where I think. The other one is if there are fewer homeowners and property values would go down, we've also seen property values increase significantly over the last 7, 8, 9, 10 years. So those two events in and of themselves don't dictate what property values should be. There's a lot of things that go into property values. Your question is, why do we have a lower percentage of home ownership than we had 7 or 8 years ago? I mean, to begin with, because we had, you know, 5, 6, 7 million defaults in 2007, 2008, and there is a process to get those people back into their homes. That's number one. Number two, the real question, which is where I think, or I would have, wanted to see much more in the article is at what point do we buy and at what point do we sell? Do we rent? And so there are a lot of factors. There's no one answer. There's no one answer that plays into this. Okay, there are definitely societal issues that drive people into rental, mobility, the strata of the age groups. There's a lot of, but there's also pure economic as well. And at a certain point, it is cheaper to own than it is to rent. And in certain markets, surprisingly, in Dade County, for the high median income, price that you have, it's very expensive to rent in certain submarkets. And it might be cheaper to own in certain submarkets. And with the cost of capital today, bank loans, it may be cheaper to own in certain submarkets. So there's no one right or wrong answer, and it all depends for individuals, right? But it's cheaper to buy in Kendall than it is to rent in Brickell, for example. And you're going to have a disposition as to what you prefer to do or not do. Well, it goes back to, then there's policy determinations that we talked about earlier. The tax deduction, right, for
Homestead.
yeah, but the homestead deduction is a minimal component. I'm talking about whatever your marginal tax rate reduction is for mortgage interest and property taxes. So as a renter, you're giving somebody else that deduction.
So when would it be better to rent in the U.S.? I can't think of a
I'll
time.
come to you. Well, I think some people would argue that it's been much cheaper to rent and reinvest in other assets. If you take a look at some of the returns in some other asset classes, some people have argued that it is much better to have deployed that capital and just rent, all the time. It depends on some markets and it depends on your personal disposition. I go back to, my personal intuitive perspective is that the single biggest component of home wealth or household wealth is equity in a home. So in a very long run, it is always more worthwhile to own than it is to rent. However, I guess the argument some people would make is how much more can you earn in other than residential markets, right? And I'll show you later on what historical returns are for stocks versus residential real estate. So, and I'll just give you that answer. Residential real estate has grown at a rate average of 6% in this country over a very long period of time. How high has the stock market gone? Even if it's just 2 or 3 more percentage points, right? Where would you rather, invest? Well, that's a personal choice.
Let me just interject something.
They'll start setting up. Yes, Kevin. Start setting up.
There's a trend, a group known as renters by choice. And these are individuals who are high income. And they choose for various reasons not to buy because of the mobility. They consume and invest. And for them, they need to be able to move around, etc. Also, this and other presentation give me a better appreciation of statistics and figures. Because you can put statistics to show anything. And one of the things that have been in America has been this concept of an aging population and so forth. And in fact, you have to look at the population in terms of categories and groups. Because in certain groups, in certain brackets, there's more growth and there's stagnation. So it's not the traditional curve. It's actually like a step ladder going down, And also, they had this thing about illegal immigration. And what they're saying, and recently since 2009, so coming up, there's also been a trend of negative, almost zero. For example, from Mexico, a lot of people think the Mexicans are coming over. There's a lot of growth and so forth taking place in Mexico, and so much manufacturing and so forth going there. There's just as much coming here. There are other categories that are coming here and staying illegally than the traditional Hispanics. There are a lot of things in statistics that are really off. But we have these stereotypes about them,
and that
them easily.
And I'll repeat it again when I'm done. We're done all the presentations. Is I think what I wanted and what I'm going to continue to challenge those who haven't done the classes, the assignments yet, is to break some of those perspectives or intuitions that we have and try to mathematically relate, you know, some of that to reality. You know, if I forget your article, but if you can blend in your immigration, give me your step ladder. Give us your step ladder and show us how this was off. So anyway, we're going to talk about farmland, which is a whole other
One last question, just to get off the rent issue. Many countries fix maximum cap on rents, like Denmark, Norway, in certain areas. We don't have any such laws.
There are still some rent control. These are sort of Depression era and prior. New York City, for example, continues to have some rent-controlled areas. And so we do have municipal areas in this country, primarily in the Northeast, where there are rent-controlled districts. But that's sort of statist, interventionist, you know, communist sort of, you know, thinking, which theoretically we shouldn't have here, but it does exist.
Professor, what if population decreases and what if immigration decreases? Would that have an impact on the future of multifamily housing?
Yeah, look, I think, I'm not an expert, but there's very few countries in the world that have seen absolute population decreases. So even with decreases in fertility rates, extensions in life expectancy keep population growing. And in a country like this, I don't know the numbers, but to your point, I mean, we have a tremendous amount of legal immigration into this country, not just illegal immigration. When I was a kid, the population was 200-something million. It's 330 or 340. So, you know, absolute population decrease, I don't see happening in this country for a long time. Now, immigration has affected specific markets more so than others. And so if immigration stops, like South Florida, like all this flight capital coming to condos, it could definitely affect, you know, real estate, right? But, you know, that's why in a presentation like this, what I'd like to see, what's the absolute number of multifamily units? And I don't know the number, but you know, it's continued to grow. And what you'll definitely see is how construction, rents, and absorption and occupancy all sort of play in with one another. There are very direct relationships in all asset classes between supply and demand. And the way we measure that, and we cover some of that in the due diligence classes, when we take a look at what is supply, right? What is existing supply? What is construction, right? What's absorption? And then what's the rent and vacancy impact on that? And you'll see that over time there will be equilibrium. The multifamily asset class historically has very low vacancy factors. So, you know, in you know, sort of full occupancy in multifamily is, you know, like 95, 96, you know, %, something like that, you know, and as long as we can maintain that occupancy factor, people keep building.
Yeah.
And all of a sudden, if it drops to 94, you see rents starting to come down. Mm-hmm. But there's definitely impacts. 2008, what happened? People moved back home. Mm-hmm. Parents moved in with children. Children stayed at home. People postponed weddings. People lived together. I mean, in certain situations. So what happened is there was definitely a reduction in the number of households. Yeah. If you take a look at multifamily REITs in the 2008-2009 timeframe, they actually had 2, 3, 4% decreases in average rents per unit. Since then, they've been increasing. And it's an asset class where the rents typically grow sort of at the rate of inflation, believe it or not. You know, because there is a sort of a paradigm there that at 96%, that's kind of like full absorption, and people are going to keep building to that, and people are going to be providing capital until there's a change there. Mm-hmm. So, yeah. Okay, let's go.
All right.
Just watch it on YouTube. Okay, go, let's go.
All right. Hey, how's everyone doing? Great. Good. I'm Emmanuel Awkward. I'm a general contractor, so development is like one step away from me. I normally do buildings. So I have a lot of my background in building construction, but for my research, it's actually in agriculture, and I get to learn a lot about agriculture and farmland. The two articles that I had, one talks about the history of agriculture and the timeline and how Illinois and Iowa are the best places for farmland. And the other one is asking a question if there is going to be a bubble in farmland, because right now it's between timberland and farmland that makes the most money in as far as it goes to investment portfolios, which I did not know. I would think it would be condos and stuff like that. To get started on what direction I wanted to take with the paper, I started asking myself questions like, what is capital markets and what does agriculture have to do with capital markets? Well, capital markets is a place where people exchange funds, like the haves give to the people that need the money for them to use for what they want to do. So you kind of pretty much invested. And in this scenario, the haves would be institutional funds and the have-nots would be the farmers. When it comes to farm, the first article that I looked at talks about the two different types of investments that you can make in farming. The first one is something that's called the row crops. The row crops are basically you plant the crops, they grow up, takes about a year to 3 years to harvest, and most investors go in. It's a short holding period. So you invest, the crops grow up, harvest, sell, and most of them are in and out. The other one is a permanent crop. The permanent crops are a little bit longer. Most of the value in permanent crops are, I want to say about 80% of them are in the tree. So investors that invest in permanent crops look to invest in the long term versus the row crops. And an example of a row crop would be corn, soybean, and wheat. Like if you look at the, what is that called? Like the Wall Street trading, like you could see them being traded as commodities. And then the permanent crops are the wine grapes, nuts, citrus, apples, and cranberry.
Okay, but just one quick second, Emmanuel.
All right.
You're not implying that a farmer who would plant row crops as opposed to permanent crops would acquire land on a short-term basis.
Well,
He would make an investment in the crop short-term,
Yeah.
but he then reinvests it when he harvests it again.
Yep.
Okay.
Yeah. So which eventually
So
kind
these
of
are
seems
long-term
to-
hold land under any scenario.
Yep.
Okay. All right.
And that's actually where the other article comes in place, because now the other article is actually comparing farmland. So now we're not talking about the investment in the crops, we're now talking about the investment in the land itself. So there's 3 types of land. You have your high quality land, the medium quality land, and the low quality land. And the article about if there's a bubble in the real estate market does a bunch of tests to kind of see where exactly, see the timeline and see where exactly it's going. So for you to understand what happened in that article, you kind of have to understand the timeline history of agriculture and how it's been growing. Which brings me to this slide. So as you can see right here, for the past 22 years, farmland has been doing well, and it did not really crash around between 1980 and 1990, but it did kind of like slow down a little. And this was
Which chart are you talking to, Emmanuel?
I'm talking about the first chart. All right, I'm going to go through the first chart.
Oh, okay, and that's farmland in Illinois.
Yeah.
How did it do in the rest of the country?
Like I was saying, okay, let's look at a graph of where most of farmland are. Most of the farmland that investors look at is in Illinois and Iowa. So most of the research, the focus area for the research was in Illinois and Iowa. as far as the rest of the world, I'll talk about that. So right now, I'm kind of jumping from slides and places. I kind of have like a timeline of what I wanted to explain, but it's fine. I love questions because then you'll be more, you talk to me and I talk to you. Illinois and Iowa is somewhere around this area, which it's defined as the Corn Belt. No, I lost my thought.
Sorry, you were saying that farmland had gone well and it had been stagnant for a little bit in the 80s, but it hadn't really taken off.
Yeah, so as you can see, when it comes to farmland, it's always going up. So one of the main reasons why it had tanked back in the 80s was they had an issue with oil. It's like the second embargo. They had an issue with oil where they could not get the crops out, like they could not transport the crops. So that indirectly created an impact in the farmland. So they could not produce as much as they needed to produce. Now, I guess after they solved the problem, the prices started to go back up again. Now the investors are a little bit more smarter. They are diversifying the market. They are not only thinking how do we plant, harvest, sell, and invest, reduce the whole cycle.
Is there a correlation in values between what the crops produce and what the cost of the land is?
Yes.
And
So
what is that?
So depending on the type of land and what the crop produced. All right, so this was the other article between Olson and Stokes, the research that they had. The results from the study shows that the price are consistent with higher quality farmland having a lower cap rate. So pretty much depending on the quality of the farmland, which is whatever it produces, that's how you determine the value.
Okay, but did you come across, if in Illinois in 2012 an acre of land cost $6,000, what implied cap rate or return is there to the owner of that land? If I were to buy an acre of land for $6,000 in 2012, what would I get out of it?
It depends on what you are planting on it, and
Okay, I'm in Illinois, I'm planting grain, there's row crop material. I mean, if you don't know it, that's okay, I don't know either, I'm asking you.
I'm not sure I
You
understand
know the answer?
question.
Yeah.
Hold on, Carol knows the answer.
Not to come back to
No, if you don't know the answer,
No, I
you
have
need
an
to keep
idea
going.
what was going on, because see, there was a time during the oil embargo they couldn't export, they could pay them to keep it. But what happened, they diversified and started using corn and so forth in ethanol and so forth. What happened? Even marginal land, the cap rate on land went way down, and they started paying more for marginal land so they could increase production, because they were having record prices on corn production. Even for animal use, the price went down because, and it was impacting the world market because less was going to food and animals.
I've read all that, but my question is what's the cap rate on
I don't know the
farm?
exact price. But
Does anybody know?
No. Couldn't you just do that? Well, I mean, this is just kind of like a very broad thing, but you can take, if you said you were buying one piece of land for $6,000, couldn't you just take the average of the annual return that he gives in the next graph?
Well, I don't know what he has in the next graph. Yeah, but that annual return, right? So my question is, this is something coming from teachers, right? So that might be return for institutional investors who turn around and lease land. So there is a scenario which is, as a landlord who leases land to farmers, what the return is. The other one seems to imply potentially a value. My question is if you own a piece of land for $6,000 and you farm it, what should you expect to get a return? as a return on it?
Oh, 10.7%.
Is that for landlords leasing land?
That's for the return on investment. So
To an owner of land who leases it, or to an owner of land who farms it?
to an owner of land who leases it.
Okay. I asked the other question. If you don't know the answer, that's okay. I don't either. I'm just curious as to what the underlying economics of farming are, so that we can then draw a correlation to whether it makes sense to own land to lease it.
Yeah.
Noah?
Can I ask you a question?
I'd yeah, wait till the end. Keep going. We sidetracked too far. I apologize.
All right. How much time do I have left?
Just keep going.
2 minutes.
You're almost done.
All right. So factors that impact the value of farmland assets is pretty much the season. The seasons when it rains, some crops do better than the other crops, and you also have the production. Like the more you produce, the more money you can get out of the crops. If you have one of the structures where you are leasing the land.
Can you go to, I don't know if you're gonna go, I'd like to cover this. Can you go, there we go. The different type leasing structures that there are.
Yeah. So you have 4 different types of leasing options. The first one is the cash lease / cash flex, and pretty much what that means is that the farmer. Okay, so let's do the cash lease first. The cash lease says that you pay more upfront on the lease as a farmer, and then in return, whatever, if you make more money on what you produce, you don't have to pay any of that to the owner. Cash flex, on the other hand, is you pay a lower premium, like a lower upfront cost, and then whatever you make, you kind of like share it with the owner. And then you have a shared lease, which is kind of similar to a cash flex, where whatever the tenant makes, they share with the investor. And then you have a custom farming where the investor says, you know what, I want to come in and play a part as a farmer, like hire a farmer and put them on the land to plant for me. And then the last one is direct farming, where the investor says, you know what, I want to do everything, farm, sell, and all that stuff. The different thresholds when it comes to the way the leasing is set up, the more riskier it is, the more returns you get. So like when you do direct farming, you would get a more return on your investment as an investor. But the thing is, now you are playing the farmer. So if you are not able to sell the crops and the products, you will lose a lot of money too.
Right, so, but just looking at the top, from a real estate perspective, the first 2 scenarios are the traditional lease structures with agricultural land. You either lease for a fixed period of time, or you lease and you do a sharecropping deal. Okay, so you basically going to split profits. The bottom 2 are more really farming businesses than they are real estate businesses. Okay, that's it, keep going.
All right. I mean, in a sense, it is kind of real estate because as an investor, you take the whole risk onto yourself.
Right, I understand, but that's we can draw the same parallel with hotels, for example. You know, a hotel brand can own its asset and operate it, or it can just be an operator.
Yep.
Okay, so, but if a hotel operator owns a real estate, they're still being viewed in the marketplace as an operator, and their profits are being derived from the operations, not from rents on the real estate.
So other factors currently affecting farmland is the use of technology. So with fertilizers and farmers being educated on how to grow different type of crops and different things that you can use crops for, you are pretty much getting more bang for your buck when it comes to utilizing technology. Most of the farmlands are being turned into biofuels, so pretty much they are now producing some type of energy output from the farmlands, and it's surprisingly still considered agriculture. when you use farmlands for those type of products. The last impact is most of the policies are affected by government. So the government plays like a big role in pushing for what's being planted.
Stephen had a question.
On the custom farming scenario, do you know what the percentage of the expense of the operator in comparison to the total revenue, like what percentage of that, you know?
The what?
The expense of the operator, how much do you pay the operator of the property to, you know, actually cultivate the crops in comparison to the actual revenue being produced, and what percentage of expense is that, you know? Just curious.
It's I don't have detail into that, but normally the operator will probably take about 60%. Most in farmland, the average for the past 22 years that was studied was 10.71%. So anything above that, you are doing pretty well, and that's in comparison to the S&P 500 and the 10-year Treasury.
We need to wrap up, but can you wrap up addressing, is there a bubble in?
So to kind of wrap up, I've talked about the whole periods and how risky it is. The depth profile when it comes to farmland, most of the farmland is owned by the farmers. So there is not a lot of depth when it comes to farming, but if there is a depth, it's normally 20% equity, loan to value. All right, so to wrap up, I don't think there's going to be a bubble anytime soon. I provided some additional supporting documents on the paper, but pretty much to kind of go with that, like there's a lot of different uses for farmland. So most farmlands are not only being used for agriculture, and with the new technology that's out there, you can now do a lot more. You can produce more crops, and the more you produce, as I spoke about earlier, the more profit the farmland is being valued.
Doctor?
Yes, what percentage of farmland is being transformed into subdivisions, be it residential, commercial, whatever? Because I've been noticing the trend where a lot of developments are moving into rural farmland areas. So you come up with any percentages in your research?
Yeah.
Would talk about the transformation?
Yeah, so what's happening right now in most rural area is at least 40% of most farmlands are being transformed for residential uses.
40%?
Yeah.
Where did you get that from?
There was a reference, I can't remember the name, but it's one of the, I remember.
Okay, can you bring it next class,
Yeah.
please? Because that seems awfully high. Okay, so let me talk to that point. I left you with the return profile, at least from NAPCREF, on institutionally owned farmland the other day. And my personal fear and concern is that a significant component of that uptick in value creation over the last few years has in fact been changing use. And I think there's been some pushback to that, and I don't know that we're necessarily going to see that, but that's intuitive from my perspective. I don't have any facts to support that, but I'm with the good doctor on that one. I'm just kind of concerned. Yes, Carol, and then Noah, and then Paul. And
Yeah, the majority of the land is owned by large companies, large investors, institutional investors in farming.
is that true, or is it owned by farmers themselves?
Farmers own.
Hold on, we've got an expert here.
Yeah, actually only about.
We have an expert.
I don't know about an expert,
But anyway, my point was, with the ethanol boom and what was happening then, farmers, when those who were doing the direct farming, those who were taking the risk, they went to leasing. The model where they cash lease marginal land so they could put it into corn production. Commodity prices are down, crude prices are down, and so they reduce the amount of corn that's being consumed. And they're locked into these leases where they contract for a certain period of time, and it's actually cheaper for them to pay for the lease, don't grow anything because the prices are so down.
Right, so, and look, there's a lot of factors, and there's a lot of factors that impact farmland, because there are a lot of subsidies. Depending on the parts of the world, there are people who are paid to not harvest so that prices stay higher. People are paid to harvest but then destroy crop so that they don't have excess supply in the marketplace and that we don't impact. I mean, there's a lot of crazy stuff like governments buy certain commodities that, have long-term use. I remember being an immigrant here and buying, eating like leftover excess peanut butter and butter that had been stored by the US government that was given to refugees because, they just took it off the market to support prices. We had an issue with a lot of corn in this country in particular being used for biofuels because the price of oil went up. Farmers started repurposing their end product and increasing the supply. That had an impact on pricing. People got upset. Now pricing is down, but a lot of what they've leased, they can't produce. So there's a lot of factors in farmland. Two quick comments,
Just to
Paul.
kind of correct that, farmland is a $2.4 trillion real estate industry, and less than 1% of those are owned by institutional.
Yeah.
1%.
Hold on, Christian, because we had Paul.
I didn't hear what you said. I'm
He
sorry.
said that less than 1% of farmland was institutionally owned. And is that from teachers?
No, this is actually from Wall Street Journal.
Okay.
And the other one is from Wilson. Wilson, the article that you gave me said less than 1% too.
Yeah, my sense would be that most farmland is actually farmer-owned, owner-occupied.
Yeah, about 280 acres are owned by farmers.
Okay, Paul, you had a question, Noah, you had a question, and then we got to move on to timber.
Yeah, I just want to know if row crops are only used for farming for alternative fuels, other uses?
For
row
consumption,
crop?
corn, we eat it. We
Yeah.
eat it. I mean, it started more with human and animal feed than the biofuels and all that. Noah?
I was gonna ask you what you thought Monsanto's role is in this, because
Monsanto?
yeah, because you got the Terminator seeds now, right? And they have to pay on their seeds because they're patented as well. So you have the seeds that are essentially gonna kill the land, and it kills any other strain that's not a Monsanto seed. But they also have the patent on the technology for the weather. And then you were talking about the 2 states, but you also have the fracking going on where they're purchasing the land along the ship.
Well,
so do you think that
I don't have any insight on Monsanto or their seeds, but
yeah,
but I'll just leave it with this. Farming is a significant market in this country. There are a lot of factors that play on it, regulation and other marketing factors. There are definitely technologies that are being brought online which are increasing production, which are impacting or can impact the supply of land, which can impact values. But I don't have an answer to your Terminator seed question.
I mean, it's kind of dangerous.
Maybe if you call Jim Cramer on CNBC, he might be able to give you some insight. He'd probably get all worked up about it. Okay.
They kill the other strains.
Yeah.
All right.
The last article today is on timberlands, and Frederick is going to take it on.
Good morning to all the investors who are in attendance.
Good morning. Good morning.
You're going to persuade us?
Yes. Let's just take 10 seconds, everybody stand up and just stretch, please.
Here we go. Yeah, do it. Everybody do it. He can see the tired faces. He can see the tired faces.
We had I had a minimum 4 slides up here, but I'm gonna make it short and sweet. I'm just gonna show you the money. That's all I'm gonna show you. And I'm gonna talk about the money. We are here today only for one reason and one reason only. To talk about making money as investors. Now, I'm going to take you in a world where there's a long history of high returns. Now, you know the money market is anywhere between 0.85 and 1.1. You have your CDs, maximum maybe of 6%. But I'm gonna take you into a world where there's pretty much guaranteed a long history of high returns. Now, this study examines the growth and value of timberland. Timberland can be defined as forest land which either currently grows or has the potential to grow a sellable quality and quantity, or the acquisition and management of a forest asset for the purpose of producing a financial instrument. Timber is a real estate asset class with diverse uses such as fuel sources, building construction, furniture making, and wood fiber for pulp-based paper and related products. Timber can be broken down into two major classifications: hardwoods and softwoods. Hardwoods are leaf-bearing trees with a device that have short individual fibers. Some well-known hardwoods are maple, oak, and eucalyptus. Hardwoods are often the most attractive wood because it provides the best source for furniture and construction materials. Softwood is a needle-bearing tree that have lighter softwoods with somewhat shorter fibers. Some major softwoods are spruce, fir, and pine. In the developed countries, softwoods are the dominant source for construction lumber and wood fiber for pulp manufacturing. There are several points and considerations I would like to focus today concerning timber. We're going to ask the question: what effect timber has on growth? Who invests in timber? Timberland investment strategies, timberland risk and returns, strategy spectrum, and timberland performance outlook. It's going to be short and sweet. What effects does timberland have on growth? Timberland grows in different geographical and topographical regions. Sunlight, soil, and water have substantial impact on growth. Different species have different growth rates. Timberland can grow naturally, or they can be planted anywhere. Who invests in timberland? Timberland is owned around the world by various public and private entities, including individuals, partnerships, corporations, and institutional investors and governments. The United States has nearly 740 million acres of forest land, of which 480 million acres are classified as timberland. Historically, timberland has offered attractive returns. Timberland also provides investors with a portfolio level diversification. From 1985 to 2007, institutions increased their investment from approximately 69 million to approximately 40 billion. Now, timberland investment strategies. There are several ways to invest in timberland. Now, you can purchase the stocks and bonds through publicly traded forest firms, participate in commingled funds, or directly property ownership of the timberland. Most timberland institutions have timberland portfolio via timberland investment management organizations called TIMOs. In 2008, there are about 30 TIMOs located in the United States, and their total value exceeded $35 billion. They rely on the strategic return drivers to yield investment performance, which include biological growth and market opportunities. There are three major economic risks associated with timberland: the volatility of price for harvested timber based on supply and demand, the substitution of alternative materials such as synthetic metals, and government stipulation regarding timber cutting rights. Now, despite the potential associated risks, timberland can yield a product or use and is said to be unique in that regard of whether prices remain high, the asset will grow in value and the trees continue to grow in size into higher value classes. Now, in conclusion, investors are concerned about inflation because it diminishes their real return and erodes the purchasing power of their money. Therefore, investors seek assets that can provide an effective hedge against inflation. Timberland has gained increasing attention in recent decades, in part due to the multiple product lines of revenue streams. Its overall low physical and economic risk and attractiveness of high level historical returns, timberland is a good fit for investors who have long-term outlooks characterized by patient capital that can be matched against long-term liabilities and obligations. Successful timberland investors create well-diverse portfolios across a broad spectrum of potential forest investment opportunities. Now, who want to make some money?
Very good, very good. Some questions for you. What are some risks involved with investing in mean, you mentioned some government, what about fires? What about droughts? Bugs?
Okay, there are physical economic risks. You have damage from pests, disease, fire, wind, and volcanic eruptions. Now, although that there is risk widespread public attention, they only account for an average of less than 1 to 1.5%.
Can you insure against those? That was a question on your paper.
Can we assure against those? Well, I've been checking into an umbrella liability. My wife does insurance, so she's supposed to get back with me. I called her and left it on the voicemail.
I don't think you can. Listen, I don't think you can, but in fact, the fact that over portfolio levels and over large periods, those risks are historically been relatively minor, that makes you feel pretty good.
Now, to answer that question, to mitigate that purposes, what foresters have done is use a process called silviculture. Now, that's a practice that are protective measures to prevent losses by fire, wind, and disease. They use the access roads, fire, and windbreaks, and pest extermination are some of the measures of silviculture. So that's what the practice they use to mitigate that service.
You talked about another risk being price volatility and market forces, and so my question is, how can you as a timberland investor protect yourself against that?
Against the last part,
the volatility in market prices.
Don't invest.
Sorry?
No, just kidding.
No, there's one. There's one, and you have the answer in your paper.
Right. Okay.
So what do you look for? Do you want me to tell you?
Yes, tell me. Since we're on time restraint.
Let's make it easy. So compared, you actually have the ability to harvest when you want here. So prices go down. What do? Don't harvest. Just let it keep growing, right?
Yes.
So okay, all right. So that was just another thought. Okay.
Thank you for your questions.
All right. Okay.
So the insurance
Hey, Alexander, is that?
When this is the best of
Just shut it for a while. Just for a second. Don't worry.
It will never get hot.
Okay.
When they use the legal funds, like high net worth individuals, they put it together to invest.
I got it with the extra stiff, work out those and the dryer is all out. I went to the bus committee yesterday, and I got this on the first day, I was like, put one straight to the other. This thing sucks. I keep going to the driveway before I That's 2 points. The balls on his name. Oh, they're not written on.
Guys, somebody's in the
Joe,
No, I have to Thank you. Just a couple of observations on the papers and on the presentations. So generally, what I would like to see more of is I want individual research. You'll see later this afternoon. You saw what I brought the other day. If I want to present returns in real estate, I look for the information. And that's what I would challenge you. The purpose here is to learn that whenever we have to do something, are we going to rely on somebody else's information, or are we going to, sort of come up with our own, right? So I know that when I teach the accounting class, one of the case studies that we do is taking a look at supplemental reports that REITs produce. And I ask questions like, what are prevailing price equity, price to earnings ratios and things like that. And you can easily go to some sort of database or, what are debt to equity ratios and try to pull it out. My experience has been that when I calculate my stuff, I know what I'm calculating as opposed to relying on somebody else's data. Use your own data. I mean, sometimes you can't gather stuff, but then go to reliable sources that gather stuff. The closer you get to the data, the closer the information you're going to have. And ultimately, I want to get in this class to the cause and effect relationships and either prove or disprove what we intuitively think. Okay? I'm not looking for people to write an article on the article I gave. I want the article to serve as a stimulus or a base for providing information. On presentations, personal, experience and choice. This can be very cold. When you're speaking to a group of people, if you're hiding behind something, it may give you more comfort, right? But I think when you talk to your audience, you generally get a better response, right? When you're looking at your audience, you get a better response than when you're looking at the screen. You get a better response when you're not reading than when you're talking. So if we just read, it sort of lulls our audience to sleep. Some other good techniques that I saw. Diffuse the situation. I have no idea what he's asking me, but I'm just going to make a joke out of it and move on. And that's exactly what he did. He was like, that's a darn good question, Well, I'll tell you what I do have, right? I mean, look, that's a political trick. And forget the political trick. When you see all these like CEOs being interviewed and they're asked questions, so it's like, I'm announcing a merger of whatever, Staples and Office Depot. And I say, well, Mr. Staples CEO, how many people are you going to put out of work as a result of this? And what do you say? You say, I'm here to talk about what a great combination of manpower we have. And you never mention the 50,000 people you're going to lay off. You immediately go, you've got your talking points, and that's what you're going to stick to. And you acknowledge the question and don't answer it. Okay? No, but that's... Right. Now, what happens is somebody's either going to buy it or not buy it. Okay? Somebody's going to either push you on it or not. And eventually, if you don't have the answer, what's the best answer you can give?
I'll get back to you.
I'll come right back. You know what? I don't have that right now, but I'm going to come back to you on that. That's an excellent point. And listen, one of the presidential candidates got beat on the other day. I didn't actually see. I just saw the articles. I didn't read. Ben Carson was in Miami, and they asked him about the Cuban trade embargo or something, and he said, well, to be quite honest with you, I'm not prepared to answer that question. I don't really know enough about it. Now, right, the argument is if you're coming to Miami, you better be prepared to have that question asked. Okay? If you're coming up here to present about demographics, somebody's going to ask you about, but if you don't know the answer, the best thing is I'm going to come back and, I'm going to come back and tell you. So just, little tips, learn. And I know it's tough when we're not used to presenting, but you're going to be asked in this industry to make a lot of presentations, whether it's to a bank, whether it's to investors, whether it's to customers, and you're going to be asked questions you don't have the answer to. And you got to learn how to deal with that. So anyway, probably the most logical thing is to take the lunch break now. Why don't we reconvene at 12:30, right? 12:30.
How do we do this?
I don't know. They're not labeled.
Flip a coin. Like the one that
Pesto, something with pesto.
That's for soup.
Not mine. Anything with bacon?
I got a bacon one. It's a bacon on bread.
Any turkey will be done.
Turkey?
Damn salad.
No, I didn't get bacon.
This is not.
Does anyone have, do we have condiments?
Bacon? I mean, turkey. I got ham.
Thank you.
This looks like turkey.
Chicken pesto. These are all chicken. Have you ever ordered chicken pesto? No, this one.
Maybe I see ham. This is me. Chicken pesto.
These are all chicken pesto. Just gave us chicken pesto. I guess we're all taking chicken pesto.
I know, they took out. What's over there?
Yeah, what are those? Are there any hot sandwiches? Chicken pesto.
Everything's turkey.
Chicken pesto. Chicken pesto.
Turkey?
This is my
Pesto.
I got it. No. Nope.
Oh, yeah, that too, bro.
Made out of my head of my
Turkey?
I think this is turkey. They don't have any on that.
But that's for turkey? That's for this. That's a big one.
Big what?
I don't know, maybe a soup.
Something with bacon on it. They put them on bagels.
Yeah, I'm cool, right?
So it's like, my article's like on chocolate and REE, and like the guys actually left the chocolate and REE security years ago. So I pulled the article and it wasn't. Here's what you needed up. Boom.
They did. Yeah, they still try chocolate.
I hope so.
So, you know, if you start.
They give us mayo today? No? No mayo.
What is the long name? Mine was the.
There's nothing? You gotta open?
It's an Italian sandwich.
Somebody must have.
Just
And
make
besides,
something.
there's no names, maybe they just did whatever they thought like.
Yep, that's what it sounds like.
And you want to come like it. So the real question is that if you were to
Right?
do something like
Well, I'll
that,
read the
you know,
stuff.
what would real estate, what would be, you know, public or privately owned real estate expectations? And you're gonna get on, you presumably in today's environment, it's gonna be here somewhere, so you know. Because we've said, privately owned real estate has less volatility than the S&P 500 and has a higher return profile. So ideally by incorporating very intuitive, you should be able to push that. I can see the that way. Now, you don't need to quantify it so much, but maybe you can talk to something like that.
Yeah.
Does that make sense?
Yeah. And as far as, you know, because obviously, you
I like the
Well, and yeah, it has to be institutional in nature. Let me ask you a question. Have you come across like an Ibbotson report?
That's great.
Take a look. There's something called, if you've got, Ibbotson, I think. These, okay?
Totally wrong, the tortoise.
They do a fair amount of research in real estate. And,
Everybody knows this. I thought you would just assume.
they've got, there's some data. There is some data. You have the,
Dude, we're not friends anymore. That turtle It only lives to like 200. Everyone can get a car drive.
yeah, so let me just show you, let me just show you, so like what I can do.
I built the cruise.
Emmanuel, what did you need?
And we're taking off like on Thursday and Friday. And so before he, finished.
Oh,
I'm gonna join everyone else and I'm
if I have you critical comments, I carry on your and not only the whole presentation, the actual document, it just went on forever, and ever, and ever, and it, I mean, kind of like your slides all down. So
what do you use? Like in your child?
Focus box. Like I configuration that we kind of lost our ability to say, okay, well, so what does this all mean? You don't know.
Every weekend I was
why? Where are you?
I will tell you, but without going into
That's why I texted you. I was like, dude, you
okay? Summarize what it is. Summarize the plan. What are you going to do? Institutional return for what you were showing there, that 10%, versus what the return for farmer is, which is different. I know, okay? But I would just make more
dude, mine's terrible. You want some math in mine? It's just not on the floor to get while we can answer. I had to dig it. It took 2 hours to do math again.
And I don't think the tackle though the bubble that aggressive.
What do you even do?
I don't think it's
Good thing I answered your text. I like you.
so I mean that's
I learned from have a chance to like sit down and like, no, let's just go and talk about football. I didn't know
but that's we all have that problem, by the way. I mean, 'cause I got more. You know, there was stuff that I will they want to present to me, for example.
They don't get it.
Because I got too much, you know, there's not enough time. It's like, you know, 5 pounds of garbage don't fit enough to go back. So, okay? Yeah. Okay, so look, this is how you do it. So like, for instance, like, so you take a look at how do I come up with that chart, right? I get the quarter now turns by year, right? I annualize them, not by adding, right? I don't talk about this later. I have to create geometric means because we use that. Yeah, I was geometric means, right? But ultimately, what I got to do with my geometric mean of my returns, my average return, my standard deviation is on all of the returns, right? So it's on the observations. So I just use this. So it really depends on like measure central tendency, deviation, variance, dispersion, right? And how do you calculate it? Well, you can use Excel. Well, now you're going to look at the time series of your observations. What they did because I didn't have it's like we look at warranties, we look at broad, we look at broad, so you know, I think
what I interpreted that as the average.
The same exact thing. That's why when I grab again, I get monthly returns, I annualize them, okay? And then I have to use a GeoMean because some years we've got negative returns. So and again, here's my return, right? And here's my standard deviation. So, what's the return of the S&P 500 index? I said it. You want me to send you that one? I said it before. Yeah, I can send you that slide. You send me an email. I'll send you this sheet. Then you got it. You don't have to do it.
Right. So, in terms of standard deviation, that's kind of like, you know, the lowest. I told them the lowest point in advance.
Well, it's a dispersion. Yes, doctor. So, but it's
you sent out what you said for the last session.
section.
I'm
I put all that stuff on the shared drive.
which article do you have? There's a couple. I don't have that because that's just a recent one and I haven't done something. So take a stab at it. If you don't have ideas, then I'll jot some down for you.
Okay, thanks.
So like, I think we had one new article this time. One person asked me for something, so I sent them, another one didn't, so I didn't. That's how I build my little database. So mean, right? Mean is, so like, estimation, right? Of all the different observations, right? Divided by the number of observations. Variance was how does it go? It's like, it's the summation of the square root of all of the different, observations, right, from that point, right? So, again, that's just a measure. There's something called range, which is a measure of, and range is the lowest point to the highest point, okay? This is variance. Standard deviation is a square root of variance. So there are different measures of dispersion.
Wait,
Yeah, absolutely. It's the same thing that you would see in this. Anyway, look for Ibbotson, because Ibbotson has done a lot on real estate portfolios. Overall portfolios with real estate or without real estate. Which talks specifically to some of the questions that I have, which is, how does real estate fit into all this?
Or just more speaking terms right now, just for the
Right, it makes sense, right? If it has higher returns and lower volatility on its own, it should definitely.
Because you know it all?
No, because I showed it last week.
You're busy like everybody else, man.
I think that one's mine. I'm afraid to eat it.
yeah, I just saw the
Yeah, there's
video,
one more.
so I-
Yeah, Brandon.
But then, you gotta work 24 hours to catch up.
This is crazy. The workload is crazy.
This man over
I don't know about
I didn't watch the video. I took it, and at the end I was like, I'm out of time. Yeah. And I missed the whole question.
because my year-to-date is very low.
Whatever, I'll make
I'll say, but I told myself, starting when I go sun, I'm gonna stop when I do 40.
Okay, so
And then, the stupid Wall Street Journal.
we're supposed to just watch the videos and write about.
Well, I did fine. I was just like, a lot of reading.
No, I'm talking about for these classes.
No, we can make our e-portfolio.
Okay.
Based on the presentations and everything, it's not making our e-portfolio.
Yeah.
We've done, start a rolling.
He did this time too.
Which one? Which data?
YouTube, the platform.
I thought it just on the road. I'll probably like take like 3 days, do like an hour.
Well, I need to discuss and make sure this So I need to discuss just the number. I made my list, because it's sort of like where the numbers scattered, especially Monday through Friday. There's an incredible amount of interruptions.
waive the fee, right? For the cruise. And then there's a.
Yeah, you guys both are encroaching.
I think it's not a back.
Office till 10 o'clock.
What did you say? They didn't put us together. So we're together.
He not knowing. So yeah, I'm trying to throw money. You get a contract.
Shit, I forgot one.
And yeah, so question, but now you need more with them. Do what?
And just so y'all know, he doesn't give me any free cursor of what's going on either, so I get it when you guys get it.
Come on, man, you gotta do better than that.
Get her feedback.
You gotta do better than that for you. You gotta let the old lady know. I ain't gonna do it. Come on.
He likes to shop back.
Oh, yeah. Oh, they're taking this class. We got all A's. Double tickets like that. All right, baby, it's your time. I'm tired. You got to do work. It's showing. It's cold in here. It's hot in the kitchen. Just get out of there. Is that what you said? It's not what I'm saying. Where's that? That's cookies. Who ordered cookies? Nobody. I was. Yo, should we go get a cookie? I'm alright. Can you give me a cookie? Two cookies. One chocolate chip and then whatever you feel. I know, but I'm gonna give it to somebody. A lucky winner. You have to buy in order to get a. Can I put someone to be delivered? I want a cookie.
Yeah. I was about to say.
Oh, cool.
Listen to the song and then come back.
Just do it. Just nod your head to
Everyone's getting ready. You're learning part of it. You're learning
Well, now we all different languages.
today.
Not everybody.
Didn't talk about it. I was like, oh, that's better.
Are you doing what class?
I ordered
I'm not gonna be here for it, but it's just a bunch of speakers. So someone that you thought, it's a portfolio one. The one that you thought was the development process.
Development strategy. Yeah, it's such a great class.
You don't understand why.
I think that was San Miguel that ordered that.
That one.
It's just.
Yeah, I like that.
I think San Miguel ordered that.
$25 conference.
Garbage.
That makes sense.
Yeah, except you get to leave.
He's gonna walk right on this one foot.
That's what I do. It's great. As Tony said, you'll never leave your name. You'll tell me the doctor, just pulled the.
I gotta go eat, man. I gotta.
Is there a doctor?
I can't eat that. It's there. I can't eat that stuff, man.
What? Yeah, I had to go.
Somebody can have my sandwich if they want.
You should yell it out. You should yell the same where you're spelling it out. You don't.
Just bend over and.
Thank you so much. Keep the change if you like. For your troubles.
No, I think county.
Oh, wow.
Where do you snatch them? Where do you snatch the Yeah. Underneath your fan? In the walls?
I don't know if we can be friends.
I'll eat the cookie if they're first of all on.
What?
I'll eat the cookie if our friends.
I don't want to force you to do something that you don't.
I'll eat the cookie that you
I want you to want it. I want you to know what I'm thinking.
I want you to want to watch the dishes.
Who wants to watch the dishes?
Nobody wants to want to listen. Tell me about the 11 more.
Many times,
Actually, you go. Imagine this with my son, if I was a woman.
No, you hang it. No, you hang it. Hello?
No, you hang up. Every time it was one of my buddies did something fun, that's what
Honestly, Saul guard the phone is hilarious.
Huh?
I was coming home from work and we did the group project with Dusty and like, he was like, alright, I love you, bye. Like,
Married couples are a lot different than like a girlfriend couple.
Elaborate.
There's skateboarding involved?
I own
It's a level of ownership, really.
You are now in my possession. And
I've changed your name, everything.
So you're right.
You were no longer a part of that previous family. You're untraded. Did you have a girl sign up for that?
Yes. Oh, yeah, that's good.
Every time. I'm thinking yeah, but the reason they get divorced is obviously
not even that. I mean, basically, a woman when you got basically it's like in a commercial.
He gets in
well, there's going to be murder involved in this.
The other person pays.
Someone go back.
Highly correlated with raising a life insurance policy. To myself, 2 weeks before this happened.
She is richer than I am.
And no.
About a prenup.
Then I'm gonna throw the love card.
You don't love me. Don't you trust me? I'm pregnant.
I don't know.
It's a quiz.
I'm totally fine.
We got quiz on who's gonna present next week.
Tip your waitress.
Tip your waitress. Get your pet spayed and neutered.
Yeah, I'm gonna make my presentation right.
You're home.
Quiz.
Something about Barker.
Was he incredible?
What?
Shut up.
You were on the PIR?
Yeah.
Shut up.
Oh yeah.
You know what God, you're
You spun the wheel?
You swear on your life.
You spun the wheel.
That's my dream.
Where's the footage? Where's the footage of this?
Oh, good luck finding it, man. It was on
So
the
you're lying.
VHS tape.
Oh
Oh,
god.
this is like
You're lying.
1990.
Yeah, probably one of the questions.
Chad, you hear this? Oh, Price is Right.
Dude, he spun the wheel.
You spun the wheel?
He didn't just get called down. He got. Did you?
Oh, I know I am.
Did you win?
Did you do $1? Did you bet $1?
Oh yeah. Yeah, I did.
Or did you go 501? You went 500?
I hate those guys.
I do.
I did that too.
I did the all.
Ask it.
But I was like,
And then he's gonna be like, oh yeah, okay. 99.
Where's this footage?
I want to be. I want to be.
it was awesome.
I am dreaming of being
You like
You wanted couch, you still have the couch.
No, we got rid of it finally. I know. It was my college.
People have all the this weekend.
I went to my neighbor's back in
Bob, that was true, and I gotta say, that was doing a great job.
So I figured you guys would show you.
You were
information your kids are some kind of meeting.
I did
So I wanted to ask.
I don't know what happened.
It would still be awesome.
But I think my buddy still has like electronic.
I read the book.
I know.
But I didn't
Still haven't heard anything from the budget committee.
No, but I think we're good now, the fact that some of us have done it, so if you guys read the package.
I looked it over myself, because here's the deal, I think Philby wants to start drawing some lines.
And the one that said that the 50.
Why is everyone running out of time? You get points with that?
I thought it was.
Yeah, so maybe you should talk with marketing.
And then you had to look over and they go, alright, you're done.
You go back to series.
Yeah, wait, you don't have to walk back to your seat.
What's going on?
Here's a good one, this is a nice book.
I also.
I can't believe you're saying this because I swear to God.
What about a bus tour, man?
I'm sure that the problem is, I'm sure that.
When you said bus tour, you kind of put a bus in my ear because I figured we should go get a bus over there and get picked up and bus back here. I'm leaving my car.
I'm gonna end up having to do something different because I'm flying out. I get it, it makes sense. Save money on parking.
Our program?
Yeah, you know, we want to make some offers like that with the MSRED.
I didn't know.
Because if we don't use somebody, you heard, if we don't use it, we lose it.
So yeah, you get some, MSRED, Student Association. What's your name? Where do you, what's your last name?
Yeah, so whoever supplied the bookstore.
I'm so jealous of this. I can't believe he did that. That's crazy. The guy's famous.
Well, here's the deal. It'd be nice if you have a gold shirt before the cruise, so I'm going to make it like that.
What are you guys talking about? For what? Nah. Is it Air Force Army football? Is that what it
Not all of us can be.
Yeah, come in and show them sorry. We don't need your names on that.
Is that what you
Initially.
We don't know yet exactly. It's about 1,000 to 3,000. You're a liar. Next year we'll do another one. So it's a good amount of money.
I'll talk to the guy, but there's this guy. And he always has all the development information.
So you think of bringing him as a guest speaker?
Well, he runs for if you provide the transportation, he'll actually he'll be the tour guide on the city. And he actually he did it for our company. And he gets some of those bigger things and he talks to all the people.
Oh yeah, I'm usually a tour guide. And then the other thing, when I deliver the package,